In Millennials and Money, millennials are turning 40 this year. A couple of surveys reveal that these older millennials believe that they will need to work at least part-time in their retirement years. Let's bring in Rob Stein, CEO of Astor Investment Management, who is tracking the action with millennials. What's been happening to this generation for the past 10 years that's making it so hard for them to get ahead?
Right. And I think it's even longer than that. That age group, they kind of came to maturity or their first jobs right before 9/11. And then they creeped their way out, perhaps, and the job market was a little bit more like you and I probably remember. And then '08 hit. And then so they're scrambling again and probably didn't participate in the housing boom, or at least the full length of it during the 2010 era. And then COVID hit. So while they moved along much like we did, just on a slower, not quite as high of a trajectory, but there's some good things happening now. With COVID and the shutdown, there's a huge demand for labor, and their services are getting higher wages. They're getting paid a lot more than they were 2-3 years ago. You're going to get some inflation, so their assets are going to increase, and they're going to work a little bit longer. But keep in mind, it's easier to work or more efficient to combine that elusive work-life balance. I think they're going to be able to achieve that. Now, while many of the millennials have been using a term called FIRE, financially independent, retire early, much different than my generation even defined that. But I do think that the back half here, and if somebody's 35 or 40, I don't want to call it the back half, but from here on, I believe that they're going to have exponential ability to save and grow assets because of inflation and higher wages. They're just going to do it in a different trajectory than we did, grinding it along like the tortoise.
Well, Rob, while I have you here, what are some growth areas that you like?
Well, from an investment standpoint, it looks like hard assets. I think housing and real estate, I think that generation is starting to acquire homes. Stock market seems like it'll continue on a path, maybe not like the last few years, but I don't think they're going to get the type of 50% declines 2 years in a row before retirement. Fixed income assets, I think, are going to have a higher yield to them eventually. In the next decade, where they'll be able to park some money or put some money in a low risk environment. And then there's going to be assets and new technologies that to be able to participate that we didn't get a chance in, whether it's Bitcoin. And I'm not saying I'm a fan of Bitcoin or electric or ESG investing. There's going to be a lot of opportunity for exponential growth for this generation in new things.
Thanks so much, Rob, for helping us out today.
Thanks, Angie.
Go to businessfirstam.com for where to see our show on TV.